It's Wednesday, the 4th of August 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The Reserve Bank ups its economic growth forecast, confident that the market will rebound once lockdowns end. That's our main story. Also coming up in today's podcast, the government explains why 60% is the magic figure for vaccinations. Crown Resorts face an uncertain future as the Victorian Royal Commission wraps up, and why payphones, yes, they still exist, are going to become free. Then, stay listening for my chat about yesterday's Reserve Bank decision with BT Shares Chief Economist David Bassanese. But first, here's a brief look at markets. Wall Street was higher overnight, with the Dow Jones Industrial Average up 0.6% in early afternoon trading. The S&P 500 was up 0.7% and the Nasdaq was 0.5% higher. Profit results continue to impress, with both DuPont and Under Armour beating expectations overnight. European markets were also stronger on the back of good earnings results across the region, led by oil and gas giant BP, which beat market expectations and said it would ramp up its dividend. Standard Chartered also reported strong results, while French financial giant Societe Generale reported its best first-half performance in 5 years. London's FTSE closed up 0.3%, while the Europe Stoxx 600 was 0.2% higher. The S&P ASX 200 closed 0.2% lower yesterday at 7,475 points, following Monday's big jump. Investors in Australia and on Wall Street seemed happy about Square's $39 billion bid for local tech group Afterpay. In trading after the deal was announced, Square's share price jumped more than 10%, while Afterpay was up another 11% yesterday. Other buy now, pay later groups continued to benefit, with Zipco closing up 7.5%. It really was a two-paced market yesterday. Most of the big companies fell outside the tech stocks. BHP, Fortescue, Transurban and Macquarie Group all dropped by more than 1%, and all the major banks fell back. Both oil and gold prices were a touch lower overnight, and the Aussie dollar is fetching just under 74 US cents. The Reserve Bank remains confident that the national economy will rebound, notwithstanding the lockdowns in Greater Sydney and southeast Queensland, and expectations of negative economic growth this quarter. The bank said it would go ahead with plans to start scaling back its huge monetary policy stimulus, albeit slightly, saying it expected a strong economic recovery once restrictions down the East Coast were lifted. Governor Philip Lowe said that the economy had considerable momentum up until the current virus outbreak, and he expected strong growth next year. Government spending and the rollout of the vaccination program will help the recovery. Based on a significant share of the population being vaccinated by the end of this year, the Reserve Bank has forecast growth of 4% next year and 2.5% in 2023. There may be a pickup in the unemployment rate given the lockdowns, but the trend remains positive. The central bank expects the unemployment rate to hit 4.25% by the end of next year. It repeated that the cash rate won't rise until actual inflation is within the 2 to 3% target range, and the most likely scenario was that this wouldn't happen before 2024. The Reserve Bank is, if nothing else, steady. A month ago, many market economists were calling for a lift in the official cash rate, well before the bank's preferred date of at least 2024. Before yesterday, there were calls for the bank to potentially boost its intervention in the bond market, or at least not scale it back on the back of the COVID-induced slowdown. But each time, the Reserve Bank has stuck to its strategy. On that basis, you'd have to think that interest rates won't rise for another 2 to 3 years. In a moment, the rest of the news you need to know this morning. In overseas news, the share price of online gaming group Tencent fell by 11% yesterday after a Chinese news agency wrote of the spiritual opium and electronic drug of gaming. At the same time, the Economic Information Daily said some school kids play Tencent's Honor of Kings game for 8 hours a day and called for stricter controls. On the back of recent decisions to rein in e-commerce, ride-sharing and online education companies, investors are worried now that the gaming groups are next in Beijing's sights. New York City will require proof of vaccination for a number of indoor activities, including concerts, restaurants and gyms. It's the first city in the US to do so, and the city's mayor hopes it will encourage jabs. Meanwhile, an investigation has found that long-time governor of the state of New York, Andrew Cuomo, sexually harassed numerous women. And one of the most troubled borders in the world is the one between India and Pakistan. Yesterday, military commanders from both sides said they'd had constructive talks and negotiations would continue. The most contentious area is the Western Himalayan region, which is incredibly beautiful and dangerous. It would be great to see the two nations come together after decades of conflict. Locally, New South Wales reported 199 community cases of COVID yesterday. Premier Gladys Berejiklian said she wanted 6 million first doses of vaccine administered by the end of this month and was considering options to incentivise people to get a jab. She also indicated that vaccinated workers may be able to leave the 8 super lockdown government areas in Sydney earlier than others. Queensland reported 16 new local cases, all linked to the Indooroopilly cluster, and more than half the cases were school children. Victoria reported 4 new cases, all were in isolation. In other COVID-related news, the Doherty Institute said both Pfizer and AstraZeneca were very effective after 2 doses. But even at 50 to 60% vaccination coverage, community spread would be hard to control. Beyond 60 and then 70%, the risks diminish considerably. Chief Medical Officer Paul Kelly, following the release of the Doherty report, said Australians need to accept that there'll be ongoing cases of COVID, and even at a 70% vaccination rate, the worst case scenario suggests 2,000 people could die each year. In other words, we'll need to learn to live with it, just like we live with the flu. The Prime Minister, Scott Morrison, yesterday was critical of a Labor suggestion to pay $300 to any Australian who got vaccinated. The PM said he was confident anyone who wanted a jab would have one by Christmas time. And the Commonwealth Bank in Westpac will begin a pilot program for employee vaccinations using AstraZeneca after doing a deal with the federal government. The head of Victoria's Royal Commission into Crown Resorts has dismissed concerns that if he suspends or cancels the gaming giant's licence, then it will be a major hit to the Victorian economy. Commissioner Ray Finkelstein said it was likely that if the James Packer-backed group was unsuitable to operate the casino, then another company would buy the group and take over its operations. Crown has already been the subject of offers from its main competitor, the Star Group, and private equity company Blackstone. The comments came on the closing day of submissions to the inquiry. Crown said it wanted to retain its licence with a monitor overseeing its reform process, or effectively be suspended for 2 years, but not let the licence go to tender. Commissioner Finkelstein is expected to report in October this year. Away from the Commission, Crown Chair Helen Coonan has brought forward her exit date to the end of this month, and the highly criticised head of Crown Melbourne, Xavier Walsh, will also leave the business. Meanwhile, the Victorian government said it would establish a new gaming regulator with a dedicated casino division to hold Crown to account. There was other economic news yesterday away from the Reserve Bank. Housing finance commitments showed that first home buyers were continuing to leave the hot property market. Commitments fell by 1.6% in June, according to the Bureau of Statistics, but if you take the first home buyers out, the figure was only slightly negative. The flip side to the story is that investors are buying back in, and that should be good news for apartment sales. However, increased investor activity could also cause regulators to step in and try and cool the market. Federal Parliament was back yesterday and question time looked different. Social distancing, masks, no public in the gallery. Unfortunately, I don't think behaviour had changed very much. In fact, question time was basically a blame game around COVID and vaccination rates. I know it's politics, but what a shame both sides couldn't be a bit more constructive with their time. Qantas will stand down 2,500 staff across its Mainline and Jetstar brands for 2 months as a result of the East Coast lockdowns. The stand downs will take effect in a fortnight. All eyes are now on Virgin to see what it does. Billionaire and major shareholder in Myer, Solomon Lew, has called on the department store to delay its annual general meeting until after its full-year results are released so shareholders can properly assess its performance. He also wants a trading update from the group. If his demand wasn't met, he said he'd use his 15.77% stake to call for an extraordinary general meeting. The results are due out in September. News Corp has bought digital data provider Oil Price Information Service, OPIS, for $1.6 billion to bolster its Dow Jones business. OPIS provides data and analytics on the oil, natural gas liquids and biofuels industries and is also pushing into renewables and carbon pricing. Consultancy EY made a record $2 billion in revenue last financial year, up 9%, thanks to client demand for services around strategies and mergers and acquisitions activity. The result exceeded expectations and is good news for the partners at the group. One challenge is finding workers. According to the Financial Review, at the start of last month, EY, along with the other 4 major consulting firms, Accenture, Deloitte, KPMG and PwC, had 500 open job ads on LinkedIn. Gaming site PointsBet, which mostly operates out of the United States, has sold $81 million in equity to institutional investors and will open a retail entitlement on Friday. The raising triggered a 14% drop in the group's share price yesterday. It sounds a lot, but the share price is still up more than 70% on a year ago. Apparently, people still use payphones. In fact, 11 million calls were made from payphones last year, with a fair amount of them to services including 000 and Lifeline. Telstra yesterday said it will make its 15,000 payphones still operating across the country free to use. Good on them. And on to the Olympics. Track cycling began yesterday, and while it's not really my cup of tea, it was amazing to see so many world records go. In the first couple of hours, the German, Chinese and Danish teams had all set new records. That's what they call a very quick velodrome. And of course, well done to the men's hockey team. Up next is our daily interview, and my guest today is David Bassanese, Chief Economist at BetaShares. With the Reserve Bank meeting, lockdowns in Sydney and Brisbane, and the biggest deal in Australian corporate history taking place, it's been a big week already. I talked to David about what it all means for both the economy and for the share market. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. It's Wednesday, the 4th of August 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.